welcome. This is the Market Wrap. I am Agam Vakil. We have seen the benchmark indices end higher. In fact, the Nifty inching towards the mark of 10,700, and this is despite the fact that the RBI has raised interest rates against consensus. Let's take a look at some of these key gainers in today's day of trade. We have gains coming in. Bharti Airtel up 4.5%, and it's the same for Titan Company. But among the heavyweights, it's Tata Motors, along with something like an Hindalco and SPI, which is lending in the strength. On the losing end, not too many counters. HPCL down around a little over 1%, but for the rest, losing less than 1%. And the advanced decline ratio again has seen a little bit of a reversal from yesterday. So when it comes to the Nifty 500, we've seen 4 gainers as against 1 loser. Let's take a look at some of these gainers in today's day of trade. Avanti Feeds hitting an upper circuit of 20% now after the substantial weakness that we saw in this stock over the previous few days. Jayaprakash Power, MTNL and Reliance Communications inching up higher, along with Kaplan Point Laboratories as well as Welspun Corp. On the losing end, Balrampur Chini were reacting along with the several other sugar stocks downwards after we had the government package on the sugar industry come through. JBF Industries, Quest Corp and 1% Beverages along with Quality continue to trend lower. The real surprise perhaps in today's day of trade will be the RBI raising interest rates. What do we make of it, and what can we expect when it comes to the markets? Let's bring in our markets editor Neeraj Shah to understand all these concepts. And Neeraj, what do you make of the markets? Is it surprising that we've seen the Nifty inch up higher despite the fact that we've seen RBI hike rates? And
maybe not sound too maybe not sound too hawkish. I think that would probably be the key point, Agam. The action was not followed by commentary which sounded hawkish. The RBI sounded fairly sanguine on growth, and put those two together, and the uncertainty of whether the RBI will hike or won't hike behind us now, and keeping the neutral stance, right? In a question that a journalist asked to the Reserve Bank Governor as well, he said we have kept it neutral because we can move either direction. They didn't sound as if this is the first of the many hikes to come. Now, of course, this may change over a period of time. If inflation hardens more than what they've projected right now, then things could be different. But it sounded a lot better than what it would have if there was some action and the tone was hawkish, or if there was no action but the tone was very hawkish. This was reasonably okay. Let's wait for the MPC minister, of course, to come out to figure out. But I think the RBI played a fairly decent card, and maybe that's why the markets are happy. But let's see, it might be too soon. Keep in mind the bond yields, which hardened a little bit, didn't come off at all. The currency stayed flat. The equity markets went back to where they were pre-policy, but the bond yields from 7.84 went to 7.89, and they at the time when we were speaking this, trading at about 7.89 as well. So those hardened a little bit and stayed there.
All right, so there you have it, and we are looking at a little bit of traction in the relatively quality stocks which were under the additional surveillance measures.
Yeah, I was about to say
that is where we've seen a swing upwards.
Yeah, I think that's the key probably takeaway, right? I think you would have already spoken about it, but probably that one mid-cap takeaway today has been that while sugar has been decimated because of whatever reason, the ASM names, some of them have come off. Some of the beaten down names too are bouncing back. Today the screen is punctuated by a lot of green at the mid-cap and the small-cap end of the market. Would be interesting to see what the fund flows are looking like as well, Agam. And maybe the derivative action, but you would have a better sense of that.
Right. Well, Neeraj, thanks for bringing us that perspective. Of course, the derivatives will bear in mind. But let's go across to a technical analyst and see as to what levels that we need to keep in our mind after we've seen this event come through, and in terms of supports and resistances. Listen in.
We're seeing a lot of strength coming on from the Nifty, but the only issue that is hitting me right now is that we are not seeing strength coming in from HDFC Bank and ICICI Bank. So that's why we are seeing, but the Bank Nifty is not in line with what the Nifty is doing. Bank Nifty should have been almost 250, 300 points up, but it's barely up 100 points. So it is clearly showing lack of leadership coming in from there. So, but I would keep that aside, and I would actually go with momentum, and I'd definitely carry on the trade going forward, even in tomorrow's trade.
If we go with the risk-reward ratio, then definitely one can look to buy Bank Nifty. Because this is one of the index within the both which have shown outperformance in the recent past, and yesterday's low of 26,050, 26,000 range becomes a very important support as of now. So not from a very positional perspective, but definitely from a BTST perspective, one is to trade the index. Then I would recommend going long on Bank Nifty with stop loss below yesterday's low of 26,050 and expect target around 26,600 to 550 range in tomorrow's trading session.
There you have it, some of those levels that you can watch out for in today's day of trade and moving into the next few sessions. But there was a pocket in the market which eventually ended the day in the red. We have Yash Upadhyay, who's going to join us to tell us about why we have seen that weakness in sugar stocks. Is it largely profit booking, Yash?
No, so actually the sugar bailout package that has been in the works for the last few days, and we have been hearing about it in the reports. And finally, the government came out today in the afternoon and they said that they have approved a 7,000 crore bailout package. Now to break it down into 4 parts. First of all, they have approved the creation of a 3 million ton sugar buffer stock and a minimum support price of about 29 rupees per kg. Now these were the two main factors. While the creation of the buffer stock, that was welcomed by market participants. We spoke with the management of Dhampur Sugar. We also caught up with the ISMA Director General Abhinash Verma. They've both welcomed that decision because we had a bumper crop this time around, Agam. Almost a 55% jump in production for this sugar season compared to the previous one, and we are expecting a similar bumper crop for the next season as well. So that would remove the excess supply from the market and curb the sugar prices, which have fallen as much as 17% on a year-on-year basis. But the MSP price, that has been fixed at 29 rupees per kg. And as we know, ISMA in its press release, they have said that the cost of production is estimated to be around 35 to 36 rupees per kg. So that price of 29 rupees, they don't know how the government came to that calculation, but that would fall short of what the sugar mills they were working with. And that is why we saw that sharp negative reaction. All of these stocks, they had run up significantly before the announcement, and right after that announcement came out, we saw them falling. And we have Balrampur Chini, that is down about 7%, along with the other key names. That apart, there was also an announcement as far as ethanol production is concerned. So the government, they are giving the sugar mills 4,400 crores worth of loans to boost their ethanol production. This is somewhere in line with what the Brazilian model is, where they would be diverting the cane production towards ethanol so as to reduce the supply of sugar.
All right, Yash, thanks for bringing out those details. So sugar stocks again, well, perhaps could see more weakness based on the kind of information that we've seen come through, and also perhaps one of those pockets which could see sustained weakness going in. But that's a wrap on the markets. But don't go anywhere. Lots more lined up, so stay tuned to the Bloomberg Quint and we'll keep bringing you more.
Sir, please believe me,